nini haikuwa na challenge sana. Yeah, so the 5 hours iko sawa. So sasa in case unataka nini tena tutaangalia then, si unajua ile makosa ilifanyika hapo kwa phase 2.
Bwana.
Lakini
nikitaka ni the same cost.
Yeah.
Haya, tutaangalia maneno. Naweza kuingia tena, sio shida.
Sawa.
Pamoja.
So guys, welcome back to the Forex Crypto Hub. It's been a while we have not had a session, but today we are going to have a session, and today I would like us to talk about entries. So today we are gonna be talking about entries. We will be talking about entries today, so that you will be in a good position to know when are you entering the trades, whether a buy or a sell. And I believe you have practiced what you have learned before. I believe you have practiced what we have been learning, because I told you all the way up to how I normally do my analysis. So we will be checking on entries. I believe you can see my screen, right? I believe you guys can see my screen. All right, so let's get into it. Let me use something like what, euro. Let me use a chart on euro USD. I remember we analyzed this market the other day while we were learning, and you can see the market is doing good. So let me do what? I'll be using this one, so that you can check on what we are gonna do. So when it comes to entries, ngesingile kitu bana, but ni sawa tu. Sometimes fear comes in. Fear comes in sometimes while you are already in a trade, you're in profits, but you get some fear. But no problem. Yeah, tutapata tu another entry, we can swing it. So I was talking about entries. Kindly mute your mic, everyone. So I was talking about entries, and talking about entries, for me to take entries, I consider a few things. Number one, I'll consider chart patterns. That is number one. Number two, I'll consider support. And resistance. And this time is not trend lines, but zones. You know, if it's a zone, it comprises of different prices. Sorry. Number three, I'll consider what we call liquidity. I'll consider liquidity. And number four, I'll consider what we call FVG or fair value gap. I'll consider fair value gap or FVG. So and then the other thing I'll consider, and that should be the first one, but no problem, is the market trend. Market trend. Because we normally say that the trend is your friend. We normally say that the trend is your friend. So these are the things I consider for my entries. These are the things I consider before I take an entry in the market. These are the things I consider. I hope you guys can see them. I hope you can see them. The first one is chart patterns. The second one is support and resistance zones. The third one is liquidity. Fourth one is the market trend, and we also have fair value gaps. And to start with, I'll start talking about. Allow me to start with the trends so that I can talk about market structure. Allow me to start with the market trends so that I can start with so that I can talk about market structure. And talking of market structure is something that you all know. Market structure is what you already know. That is, if the market is in an uptrend, it's gonna be giving you what? Higher highs and higher lows, higher highs and higher lows. That is it for an uptrend, right? Now, when we talk of market structure, we have internal and external structure. So, um, let me do something here so that the demonstration will be well. Mhm. So let's say on higher time frames, this is the you have an uptrend on higher time frames, right? So the structures on higher time frames, those are now the external what? External market structure. But now when it comes to lower time frames, it's gonna be an internal market structure. Let's say something like 15 minutes, 30 minutes, or 1 hour, or a time frame which is lower than that. It's gonna be what? It's gonna be an internal market what? Market structure. So let's say for this one on on daily time frame, the market is in an uptrend, right? So since the market is up here, for the structure to complete, we can expect what? We can expect the market to come here so that the structure can complete, right? Sawa. So that is what now when we talk of market structure completion, we talk about if the market is here coming back here to complete the structure, or if the market is down here going up like that. Now we have seen that on the higher time frame, and in this case we have said we are on a daily time frame. The structure here is what? It's bullish. Now let's say we are in an H4, and um, on the 4 hour time frame, we will be having this kind of market structure, which is a downtrend. On the higher time frame is an uptrend, but now here on the 4 hour time frame, we will be having what? We will be having a downtrend, right? So now when we talk of this one now, the one on 4 hours or 1 hour, that is now an internal market structure. So what we can expect is that after the market completes the internal structure, we can expect it now to break out so that it will go and complete the external structure. As we continue, you will get to understand how these things come up together, both the internal and the external structures. So for today, let me not talk more about them. Now, let me get into chart patterns. Chart patterns. Let's check on Chat GPT if it will give us a better explanation of a chart pattern. Because let's see. Chart patterns. Let's see the explanation it's gonna give us. No, chart patterns are formed due to the repetition which happens in the market. Yeah, like the market has come to a certain point, then it will come again to that certain point. By the end of the day, the market will have formed a certain pattern because of the repetition. So the explanation we have here is that chart patterns are shapes formed by price movement on a chart. Traders use them to estimate the probability of future price direction, right? I hope that explanation is simple enough for everyone to understand it. I hope that explanation is simple enough for everyone to understand it. I hope we are all together. Anybody who can't get that simple explanation, because it's just very simple. Alright, now having that and having known now what chart patterns are, let's dive into it. And when it comes to chart patterns, we have two types of chart patterns. We have continuation patterns and reversal patterns. As the name suggests, if it's a reversal pattern, it's going to show a change in trend. If it's a continuation pattern, it will show you a continuation in that trend. And in most cases, uh, the reversal patterns are the most important chart patterns. Reversal patterns are the most reversal patterns are the most important chart patterns, because if you are in a continuation pattern, you will have a reversal pattern inside it. As we continue to learn, I'll show you how that comes to be. So today we are going to start with the reversal patterns. And we will start with the common ones. We have the first one, which is what we normally call a double top, or the letter M uh, formation. So that is how it looks. It just resembles a letter M. It resembles letter M. It resembles letter M. It resembles letter M. It resembles letter M. I hope you can see it there. Let me show you the tops. We have the first. So we have why is this not speaking, man? So what we have, the first sharp point, that is the first top. Okay, it's okay now. So we have the first top, and then we have what? We have the second top. Sawa. And one thing you need to know about these patterns, they don't need to be perfect. Sometimes you'll get it like a twisted letter M, but it's still what? It's still a double. It's still a double. It's still a double top. You can get it as the one I've just drawn. Sometimes you'll get it like this, and it will be valid. It will be valid. So don't expect to get perfect things in the market. Now we have this point here. We have this level here. This one we call it a neckline. We call this one a neckline. The turning point here, we call it a neckline. This turning point here, we call it a neckline. So in most cases, if you missed an entry here during the formation of the second top, you can wait for the market to break the neckline, and then upon retest, you can now take your entry. And in some cases, when you go to lower time frames, the market, when it comes to retest on the neckline, probably the neckline for 1 hour on M15 or M5, the market will have formed you another confirmation of a double top. These things, this is the demonstration part. We will be doing the practical part of it later or another day, so that you can confirm whether what I'm telling you it's really there. And also from there you can start observing price movement and see whether it's going to happen in the future. So that is how a double top looks like and how you can trade it. You can either get an entry during the formation of the second top, or you wait for a breakout and retest at the neckline. Now, if you are to enter the market using the second top, the market has to be at a key level. Underline that. The market must be at a key level. The market must be a key level. The market must be at a key level. The market must be at a key level. And in this case, when talking about a key level, in this case, I'm talking of either a resistance zone. Remember, we are selling, so the market can either be at a resistance zone or a supply zone. Or if you understand order blocks, the market can either be at a what? A bearish order block, right? Because this is a sell signal. Double top is a sell signal. When you see that letter M being formed in the market, it is showing that the market is gonna sell. Actually, when you look just right here on our charts, there's one just here. Market went up, market came down, market went up, and then it dropped massively. So like in this case, if you had missed this entry, market did not come back for a retest on the neckline, but it dropped massively. Again, look here, if you are to take that trade, what could have made you to take the trade? When you look on the left hand side there, you can see we had a very strong zone. So you could have taken your entry during the formation of the second top very comfortable. And also now when we come to learn about the fair value gaps, you will see we had a fair value gap there. So you had enough confirmations for you to take that trade. But right now I was just talking about double top. Have you guys understood about how a double top looks and how you can actually take and trade based on a double top? Have you understood it? I can see thumbs up there, meaning you have understood. I can see thumbs up there, meaning you have understood. So, okay, let's proceed to the next chart pattern. Let's proceed. Remember, I've said the chart patterns don't have to be perfect like the one here. It can be twisted like this, but it's still a double top. Remember, a double top, I've just told you, is a reversal pattern and it's a sell signal. Now, what is the opposite of a double top? Is a pattern we normally call a double bottom. It looks like a W. Double bottom. So you have the first bottom here, and here is the second bottom. Then the market can go up. After breakout on the neckline, you can expect the market to come back for a retest on the neckline, and then you can continue with the trend. So I've just told you, if you miss an entry like in this one, if you missed your entry during the formation of the second bottom, you can wait for the market at the retest of the neckline. During the retest of the neckline, whereby you can take your trade there. And if you had the first entry, during the formation of the second bottom, you can take a second entry during now the retest of what? Of the neckline. And we will do a few pairs practically and see how many pips does the market go when it forms this kind of a pattern, because If you see a pair, sorry, if you see a pattern like this, let's say it's a double bottom or a double top, you see these pairs, and then you go to a particular pair, let's say like the one we are having right now is the Euro USD. You study the pair and see how many pips does this pair go when it forms this pattern. Let's use this as an example. After that pattern was formed, the market dropped 138 pips. So let's say you go throughout the chart of Euro USD, you do more than 30 or 40 analysis where you have double tops, meeting all your criteria, and you see how many pips does the market go after respecting. By the end of the day, you will come up with an average. Maybe the average can be 50 pips or 60 or whatever amount of pips it can be. Then, since you now have the average, when in future the market forms the same setup, you will enter your trade and you will target the average number of pips you came into a conclusion after backtesting that particular pair. I hope we are moving together on that. So we have checked on what? We have checked on double top, we have checked on double bottom. Those are the two reversal patterns we have checked on so far. Number three, number three, and this one I don't use it mostly. We have a triple top. A triple top is just a failed double top. After the market comes to the neckline here, it fails to break, but it respects, then goes back up, and then after going up now, you can see it come down. So a triple top is a failed what? Is a failed double top, double top. Remember we have said the neckline is very key. So even if it's a triple top, after the market breaks out the neckline, if you are to take another entry or if you missed that first entry, you can wait for a slight retest there, then you can get your entry there, right? Remember, and I told you these are not the key levels, sorry, the patterns must be formed at key levels. And I've said it can be either, in this case, it can be either at a resistance zone or a bearish order block or a supply zone.